SITA, you are to remit within 21 days of deduction. That is what is in practice. For company in PPTA, that is in a petroleum downstream sector now, upstream, upstream, remittance must be made within 30 days of deduction of tax. That is it. For state internal revenue services, remittance must be doing within 30 days of deduction. And tax is payable in the currency of qualified transaction. So let me tell you this. Under the VATA, it did mention that you must pay tax on the currency of transaction, meaning that if there's the transaction between myself and yourself, the currency is dollar, you must remit in dollar. If it's in pounds, you must remit in pounds. If it is euro, you must remit in euro. But however, based on the COVID relief, tax relief by the Federal Inland Revenue, especially signed by the chairman, he did mention that if you have difficulty in raising currency of transaction, you can pay in naira. But how much rate to be applied, that depends on the prevailing rate, and you must, to avoid issue on that, you must be on the same page with your tax authority or the tax resident where you have your tax file. So be on the same page with them. You convert, you agree. Today, dollar is so amount. I have a transaction for dollar. I want to pay in naira. So convert with this, and that will be documented to forestall issues in the past. So qualified transactions for withholding tax. Qualified transaction is a transaction specified in tax law as liable to withholding tax. So basically, like I've said, that withholding tax is solely applicable on qualified transactions. So what are the qualified transactions? Qualified transactions are those specifically mentioned in our tax laws. So these are the applicable tax rates. This slide will be telling you the rate and the qualified incomes. This is what is mentioned, specifically mentioned in our law: dividend, rent, interest. Now, withholding tax rate for company for dividend, rent, interest is 10%. For company, even for individual, it's also 10%. For royalty, 10% for company, but 5% for individual. For hire of equipment, motor vehicle, plant and equipment, is 10% for company, also 10% for individual. All commission, consultancy, technical management fee, legal fee, audit fee, listing fee, other professional fee, in short, every fee for company, withholding tax rate is 10%. For individual is 5%. For construction of all type, contract, agency, arrangement other than sales in the ordinary course of business, 5%. However, note the new Finance Act of 2020 has specifically come to say withholding tax on contract is now 2.5%, and it's specifically mentioned, define what kind of contract are they talking about, not just ordinary contract between myself and you sign a contract agreement and all the rest. The law specifically mentioned those contracts where you can have a reduced rate. It was initially reversed in Finance Act 2019 and reversed to 25%, but Finance Act 2020 has again reversed back to the reduced rate of 2.5%. So sales in not in the ordinary course of business, there is a lot of argument around that. But recently, let me clear that this, I think, Mr. Obina, I still have time, I can talk about it. So what constitutes sales in the ordinary course of business? Now, unfortunately, one of the issues with withholding tax is that the law does not define what constitutes transaction in the ordinary course of business. Now, meaning that everybody can subject it to personal interpretation depending on what favors you, and you can determine that. And you know, our law, nobody can interpret law and validate it except court. Court can say, oh, this is the intention of the legislators. So now, what constitutes ordinary course of business? Now, if my business is professional services, meaning that everything I'm doing in that business, if I'm not outside the my principal activities or professional field, it means it should be ordinary course of business. However, this is not the interpretation the tax authority has given it. The tax authority has given it as to mean any transactions that are done, like an over-the-counter transactions. Somebody walks to your shop. For example, I'm a car dealer now. Somebody just walk into my shop and say, "Oh, I want to buy this Kia, 10 Kias for 10 billion, whatever." That is considered as ordinary in the ordinary course of business, and it's like a over-the-counter transactions, which should ordinarily not qualify for withholding tax. However, the tax authority has come out to say, okay, for example, if I'm sitting down in my room, I just call Dana's Motor. I say, oh, Dana's, please, I want you to deliver so number of Cerato, so number of Kia to my house and all the rest. Now, even though I'm still in my business of selling cars, that is my ordinary course of business. I don't have any other thing. That is what I'm doing in the first instance. The tax authority has come out to say no, because the customer has not walked into your shop, it is not an over-the-counter transactions. The customer is expected to be charged higher than what you will have charged the working customer. The FRS or the tax authority consider that kind of contract as a contract and not done in the ordinary course of business. That they expect withholding tax of 5% to apply. Of course, there is a court judgment recently, which I can share with you after this section, if I have permission of Mr. Bina, that actually rubbish that interpretation from the Federal Tax Authority. The judgment of that High Court did mention that whatever I'm doing, if it's still in the normal transaction of my principal activity, whether it is done virtually, done whether in your or I come to you, whether the existence of contract does not change what constitutes ordinary course of business. I think I'm Mr. Vina, please, am I audible? Am I not talking to myself? Please, can you just confirm?
I can hear you.
All right, thank you for the confirmation, sir. Thank you. Now, like I said, the ordinary course of business based on FRS interpretation has been rubbish to say the existence of contract does not change what constitutes ordinary course of business. That is, if whatever I'm doing, if it's still within the normal norms of my principal activities, whether there's a contract or no contract, withholding it should not be subjected to withholding tax. It should be seen as done in the ordinary course of business. But a lot of because you are not a party to that judgment, and I always advise clients, I always advise anybody, any judgment that you are not a party to, and the appeal channel of that judgment has not been exhausted. For example, you are still in the High Court, you still have Court of Appeal, you still have Supreme Court. Don't implement source. Don't just watch. Just be waiting. Let's see the end of that judgment. So by the time you get to Supreme Court and the Supreme Court pronounced that the existence of contract does not change what constitutes ordinary course of business, then you can